Today on the podcast, I sat down with Mark Eckerle, a partner at Withum. Withum is one of the top accounting, tax, and advisory firms in the country, and they have a dedicated digital asset practice that has been assisting companies of all shapes and sizes with their blockchain-specific needs. Mark and the Withum team have been a huge help to a number of our companies at Castle Island over the years, and you've probably heard their name as a sponsor on the Friday Roundup shows. I was excited to have Mark on the show to talk about his views on the evolution of the industry and some of the hot-button topics that Withum's customers are dealing with in today's environment. So without further ado, here's my conversation with Mark at Withum.
Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. Guests and hosts may maintain positions in the assets discussed in this podcast. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Mark, well, thanks so much for joining us today on the podcast.
Thanks, Matt. Appreciate you having me.
Excited to talk about Withum. You guys have been really, really deep in the digital asset blockchain space for a long time. So maybe for those who are not familiar, tell us a little bit about the company and what you guys are up to.
Yeah, and again, appreciate you having me on. So Withum, we are what we label a full service accounting firm. So we offer the big three. We kind of have it in our name tag. It's audit, advisory, tax. I think audit kind of speaks for itself, tax as well. But under that advisory umbrella, we really have a whole host of services that we do offer. Things like ERP implementations, if you're looking to change softwares, transaction advisory services, forensics and valuation, audit support, as well as your basic bookkeeping, which we label our Oasis group. So outsourced accounting systems and services practice. Another thing that we also offer that you wouldn't really think of from an accounting firm is cybersecurity solutions. So we do managed IT, incident response, digital forensics, and things like that. All in, we are about 2,700 employees. We have 26 offices, primarily up and down the east and west coast of the United States, all the way from Boston to Orlando, all the way from Seattle to San Diego. So widespread reach here in the United States with a large presence. And we're looking to continue that growth in the Midwest as well.
And you guys have been at it in the crypto blockchain space for a long, long time. How did that come to pass?
I'll quickly start at the beginning of my journey because that kind of segues perfectly into how Withum's practice grew as a whole. I first got exposure to Bitcoin, I'll say, back in 2014 from my brother-in-law. So I kind of credit my entire professional career to him because he was talking about Bitcoin and it's going to be the next currency, global currency, and everyone in our family thought he was nuts. But about a year later, at the firm I was at, my previous accounting firm, they had a client come to us and it was a Bitcoin client and no one knew how to audit Bitcoin. The partner at that time came out to the bullpen and just said, has anyone heard of Bitcoin? Anyone know what a Bitcoin is? So I raised my hand. Ever since then, my career has pretty much blossomed with digital assets supporting me ever since. Obviously, with the market as a tailwind has certainly helped that initiative as well. But in 2018, when I was looking for potential career opportunities just to see what was out in the marketplace, I came across the headline that Withum had just launched their digital asset practice. And there was no one really spearheading our group at the time. It really lived as a subsector under our technology group. So the partner leading our technology group, Krista Mayo, was kind of the only one that really had any experience with digital assets. So I interviewed with him, and when I joined, it was to really lead that practice. We had 3, maybe 4 clients. So the goal was really grow the practice, lead the group, be entrepreneurial, take it wherever you want. That's the kind of spirit I had. So I had the resources to really hit the ground running, go to the market, really show the industry that Withum was in this space, bring my 3 years of experience at that time, which there really weren't many accounting firms in the space back in 2018. And still to this day, that kind of rings true, unfortunately. Really help build our market in the group. We have newsletters that we send out, internal resources. I host a podcast called Cryptonomics. So really just trying to build our brand in the space. We make sure we have boots on the ground at all the major conferences. But a couple of the things that we had at the time that really helped grow us and our brand were back in 2018, still to this day, there's a little bit of limited regulation. But we were working with the New York Department of Financial Services at the time and working through the first stablecoin attestation. We really pride ourselves on that release back in 2018 and how far we've come today as a market. Previously at that time, the only reporting was by the token issuers. So there was no independent firm coming in and really attesting to the reserves that are supporting the underlying token. We were pride ourselves on that release back in September 2018. And then another thing that we helped work through was the first SEC approved ICO. So we're the auditor note for working with Blockstack back in 2018, 2019. The years are starting to blur at this point. But at that time, every company was doing an ICO and issuing a token for a variety of reasons and purposes and all having different types of utility. So it was neat working with the other side of the table and working with the SEC and what did they want for this token report and this release to make sure that we were fully compliant. We really hang our hat on those two things being first to market. And we're really prideful that our group has really blossomed with that at our backs.
It sounds like you have to thank your brother-in-law to some degree. This is a very valuable brother-in-law you have.
I would not be here if it was not for him. I definitely owe him a beer or two.
It's funny when you were telling that story. I remember the exact conference room I was in at Fidelity when someone in 2014 said, "Does anyone know anything about Bitcoin?" It's remarkable that just being in the right place at the right time and being passionate about Bitcoin and entrepreneurial, it's really how a lot of people got started in this industry.
Just raising your hand for a new opportunity. If I hadn't spoken up at that time, I don't know where I would be. And I can tell you, I would not be nearly as happy or successful.
Glad you're in that spot. Maybe just backing up a little bit and taking this from the direction of a startup. So we're investing in pre-seed and seed stage startups. I would say, generally speaking, a lot of technologists that maybe don't have a lot of experience in tax and accounting. How are you guys engaging with the earliest stage companies once that money goes in from the venture capital side of the industry? What do entrepreneurs need to be thinking about out of the gate?
That's, I would say, almost our sweet spot. Technology here at Withum is our second largest industry that we service. And we offer a whole host of services, and it really runs the gamut on what type of companies we work with. We work with startups, pre-seed, series seed, maybe that haven't even done a first financing. They just have maybe a debt facility on the books, raised $1 million through a safe note, all the way to mature series B, series C, to companies that are already public today. The one thing we pride ourselves on is we are flexible and nimble. We grow as you grow. Working with a startup is completely different than working with a company that is Series B, has a full finance and accounting team already built out, and we can apply those resources as needed. I would say our first way to assist is both, like you mentioned, on the accounting and on the tax front, because no matter when your company started, no matter how many employees you have, you still have to file annual corporate tax returns. So we assist with that. And the one specialty that you're getting from Withum is we are your resource. We are your advisors. We know what's applicable to your business and what's not, where you can have tax savings, tax strategies. We can loop in any of our specialists from sales tax, R&D tax credits. If you need any valuation assistance, if you're issuing a token or a business valuation. So we have all those specialists that can assist and be parachute in to your business as needed. So you always have a go-to person to assist. But I think from a startup's perspective and from where we can assist founders, it would be on that day-to-day bookkeeping, right? So you don't want to be bogged down with the day-to-day record keeping. It's certainly cost-effective to outsource that, whether it's to Withum or to another firm. As you're looking to build operations, focus on building strategy and really growing the business, you definitely don't want to put the accounting by the wayside, but you shouldn't be focusing on that as your day-to-day. There's certainly other more important things to keep in mind. The best part about working with Withum is we don't nickel and dime any of our clients. My cell phone, as you've seen, Matt, is right in my signature tag. So call me, text me. I'm always here to answer any questions for any clients that we work with, or I can point you in the direction as to who can get that answer for you. So we're always here to be an advisor and to help our businesses grow, our clients grow, and scale up as they scale up.
And I guess in the blockchain space, you have startups that start off with just traditional needs around tax and accounting, bookkeeping and whatnot. And then where it starts to maybe get more complicated for a lot of companies is you have a customer that wants to pay you in something other than dollars, cryptocurrency. So maybe talk about some of those challenges and where you're engaging with customers as they initially go down this crypto rabbit hole.
It's funny. We actually had, I think this was going on 4 or 5 years ago, a prospect at the time came to us and said, we want to work with you, but we don't want to deplete our Ethereum balance. Can we pay you in Ethereum? So immediately we start engaging firms who can assist us in accepting, because I would say we're not in the business of holding digital assets with them, but by all means, why can't we accept it and just convert it? I am proud to say Withum does accept digital assets if anyone wants to pay us in that. It was an interesting time because talking to a lot of folks here at the firm, they were like, why do we want to accept this? What's going on? I'm like, we're not holding it. Let's take a step back. We're just accepting it. It's to open the door for new business, which is the same way I talk to our clients today. When you think of traditional technology clients, a vendor might come to them and say, hey, can you pay me in stablecoins if they're international, because of the flexibility that it offers, the real-time settlement, faster transactions, low transaction fees. I'm seeing a lot of those situations for companies that don't have any crypto component to their business, just traditional tech for one reason or another. And they come to Withum and they say, hey, how do I approach this? And that's kind of where we go back to the crypto 101. Here's how you get a wallet. Here's how you can check balances on chain. Here's how you can verify security controls and make sure you have the right internal controls at your department of who has access, who can approve transactions, et cetera. But I mean, when we're thinking of how do you accept crypto, I mean, there's certain controls you want to have in place, like I mentioned. You want to find the right platform that's right for you, whether that's using a third-party custodian or that's using some type of cold storage, cold wallet, whatever you're comfortable with, and making sure you have the right controls in place. That's wearing my auditor hat, where I'm coming into play here. But it's important to know when you're getting into this new space, it's very different than the traditional banking system. So it's very easy to become susceptible to sending a transaction to the wrong wallet address. You can't get that money back, unfortunately. So it's very different. And another thing is making sure you understand what doors you need to open for what crypto you want to accept or what crypto you want to pay vendors. I think a lot of the times the first foray is in stablecoins. It's the easiest to denominate. I think it's the easiest to transact with. And it's easiest when you think of the accounting or tax implications. Because when you start opening the door for digital assets, you got to also keep in mind there's certain hurdles when it comes to bookkeeping, as well as your tax reporting. So thinking of which digital assets you want to transact with, understanding what platforms offer that capability. And obviously many of the softwares, many of the exchanges offer the major cryptocurrency. So it's really not that hard to find one that fits the right bill there. And I say all of that with the caveat where a lot of this can be helped and the pain points can be suppressed through the right softwares. And that's another thing where you have to think about what's right for your business, because I don't think there is, to this day, one software that's the best by far. When you think of what's tracking and accounting for digital assets, I think each one offers its own variety and its own best case, and each one has its own inherent challenges. So you got to find which one that fits your business and how you're looking to utilize digital assets. It's an interesting time because there's a lot of non-crypto companies just looking to get into the space because of vendors asking for it.
Look, if you have a customer that's going to pay you a big ticket and they're only willing to send it to you in Bitcoin, Ethereum, or stablecoins, I think you're going to figure out how to do it.
Yeah, you're not going to say no to that.
The other interesting thing is obviously a lot of companies maybe got into the crypto space by accepting payments, but now you're starting to actually see publicly traded companies put it on the balance sheet, which has been an interesting trend. Any views on that and whether or not that's something that we'll see continue here at scale?
I think yes. I think we'll continue to see more and more companies put it onto the balance sheet. And I think one of the hesitancies previously was the lack of clarity around accounting reporting and tax reporting. And I think we're starting to see with the new guidance that came out last December, the new ASU standard, we're now going to be able to fair value digital assets on the balance sheet. I think that's going to help paint a better picture as to the financial position of companies. So the previous guidance where you have impairment in tangible assets, your marking is down, the balance sheet didn't really give a good insight as to the position of the company and where it stands today. So I think with this new standard, I think more and more companies are going to be enticed to maybe put some potential treasury into Bitcoin. And I think this parlays directly with the approvals of the ETFs. I think that is going to open a couple businesses' minds up to this opportunity, whether they're holding it themselves or they're investing it in like an ETF. This is my personal opinion, but I think Bitcoin and crypto is here to stay. So it's just a matter of time before we get to that point, before more and more companies decide to have it as an alternative asset on their balance sheet.
It's going to make the life of a corporate treasurer a lot more interesting to have these conversations happening where you have publicly traded healthcare technology companies that are buying Bitcoin on a regular basis here. It's a fascinating world.
I talked to a lot of people here at our firm where crypto can touch any industry. It can touch any business. So it's not just technology companies that are working with digital assets. We have not-for-profit groups. We have manufacturing companies. So it's really industry agnostic from that point of view, where anyone at any point in time can just decide to get into it.
Now, one of the things that has been highlighted over the past few years with some of the scandals that have happened in this industry is just the importance of internal controls. This is always something that I'm sure you guys have focused on at non-crypto companies around cash movement and segregation of duties and things like that. It's especially pronounced in a world where these are bearer assets that are flying across the organization. Maybe talk a little bit about some of the work that you guys are doing with things like SOC audits and how customers are engaging with you.
That's one area that we've put more of a focus on nowadays, where the controls around both platforms that companies are launching as well as their involvement with tokens. So when we're thinking of an audit perspective, we always want to make sure that wallets that companies tell us exist, we perform specialized testing on those accounts, very different than we would cash at a bank. And that's regardless if it's held at a third-party exchange or if it's held in cold storage and personal wallets. So there are specialized audit procedures around that. But when you think of platforms and how companies are launching some new, whether it's a layer 2 or it's some type of transaction means that they're launching, we definitely want to bring in our IT team to make sure that they have a full understanding of the controls around that. Because the way I like to view it is when you think of like a payroll system, when you look at ADP, they have a SOC report done and auditors will rely on that. A lot of this crypto-friendly activity, we're trying to fit crypto into the existing infrastructure. So by doing so, we have to certainly form some alternative procedures around that. And that's where our IT team comes into play. So we're really trying to leverage their expertise, their knowledge on blockchain technology. Because I would say I'm the first person, I don't know how to code. I know how to read blockchain technology and I know how to perform transactions and understand that, but I don't know the first thing about coding. So definitely have to loop in the specialist when it comes to that. It's very interesting because it's not a traditional audit when you think of digital assets. We really have to become specialized and create these alternative procedures. So SOC reporting is one, like you mentioned, where we're definitely finding a sweet spot for us to offer opportunities to clients, because the biggest thing to think about for a SOC report and the reason why you want to get it is for customers. Customers are going to come to you. Can I rely on your platform? And the reason you can rely on it is because we had a third-party audit firm come in and independently test the controls and the reliance on those controls that you can offer. To give that assurance to your customers is really the peace of mind that we're looking for. And it's the same thing for when we think of our stablecoin attestations. The whole reason we do our stablecoin attestations is for the peace of mind for customers, that they can have the trust that the reserves exist, that peg that is out there on the public float, it maintains that one-to-one float. It really comes down to that, where we're just trying to make sure all customers at the end of the day can properly rely on those platforms or those tokens.
So you mentioned stablecoins, and that's what I want to talk about next. Something like 60% of every blockchain transaction that is happening in a given day is a stablecoin transfer, which is just a mind-boggling thing. These things didn't exist a few years ago, and we're at scale in a world where the banks don't have clarity on holding these things yet. SAB 121 is still an issue. We don't have a market structure bill yet, and we don't have a stablecoin bill yet, where a number of these potential issuers are just sitting on the sidelines, but ready to go. And it's possible that within the next 12 months, we would have SAB 121 pulled back, a stablecoin bill, and a market structure bill. So would lead me to believe that stablecoins will just continue to proliferate and really be a huge opportunity for all sorts of companies. How are you guys seeing this category, and what type of engagements are you undertaking in the stablecoin area?
We certainly share a similar mindset to you guys, where I think stablecoins are the biggest play right now. And I think that's the way for digital assets in today's world to grow the most. Because I think when you think of the layman person, when you think of stablecoins, it's the easiest way to position how crypto can come into play and the utilization of blockchain technology and what it offers. It's the easiest to denominate, right? Because anytime that you think of Bitcoin, you try to explain it to someone, they just immediately go to the price and the volatility. And they're like, why am I going to invest in that? So let's take a step back and just understand the digitization of currency. And stablecoins are really prevalent to our group as a whole and a lot of the clients that we work with. So as I mentioned earlier, we were working with the first approved stablecoin report, and we continue to build that practice. We're also a part of the American Institute of CPAs, the AI CPAs subcommittee group for the proof of reserves, where we're looking on rolling out more of a standardized reporting format for all token issuers. And I think that goes hand in hand with all this other regulation that you named, where we're going to see in the next 6 to 12 months, a lot of regulation come down the pipeline, because I think this is the biggest use case right now for digital assets as a whole. It's not just in the United States. This is a global transaction. It's so easy to send funds around the world. And a lot of companies we work with have international developers, international employees, to offer that real-time settlement where if they can get paid, I don't want to say daily because that'd be a lot, but maybe weekly, instead of waiting for your biweekly payment or your monthly payment. I think that can get a lot of people on board with the concept of what stablecoins can offer. And as far as what we're seeing, I think it goes hand in hand with the increased eye on stablecoins on a regulatory front, where more and more companies are approaching firms like Withum. They want to be fully compliant. They want to follow the current regulatory framework. Whereas 4 or 5 years ago, there was token issuers left and right, but there was no standardized reporting. So now that we're seeing a lot of this regulation come into play, I think a lot of companies are starting to approach accounting firms because they want to make sure that they're building that public trust. They're getting those proof of reserves reports to make sure that the assets underlying the token exist, and they can throw that stamp of approval on their website. They can throw it to the public to show them, like, hey, this isn't just us saying this. This is a third-party firm coming in and telling you how it is.
When you think about just the use cases for stablecoins here, you mentioned payroll, and I think you'll start to see this move in a direction of almost real-time payroll in certain cases, where you're able to move a stablecoin across the world nearly instantaneously. You're starting to see use cases around securities settlement even being discussed at some of the large banks. So it'll almost be a tapestry of use cases that all start to emerge here on stablecoins. So you could imagine this being a category where you have stablecoins on L2, stablecoins that are issued by banks. It'll be really interesting to see what type of engagements start to pop up just within this one category in the crypto industry.
Yeah, and I think a lot of companies, they're not going to be crypto companies. So they're not going to be holding Bitcoin or Ethereum, maybe just Ethereum for gas fees or Solana or something like that. But they're going to be transacting more frequently with stablecoins and just holding it because it's so easy to denominate. We see tons of companies that just are having USDC on the balance sheet or having a Tether or having some USDP because it's so easy to transact with, and just having that in your back pocket if and when needed. You can get a lot of more employees, like you mentioned, on board if you're offering that real-time settlement. Now, obviously, you're going to have some of that administrative headache if you want to pay employees every single day. Put the brakes on that maybe a little bit, maybe go for like a weekly settlement. I certainly agree. I think it's definitely the biggest use case, in my opinion, for building crypto in today's world.
Another thing you mentioned was proof of reserves. And I would say this is maybe one of the best exports that the crypto industry has brought to traditional financial services. You just think about some of the crises that would have been averted, not only in crypto, but just in traditional finance over the years, if you were actually able to prove that a financial institution held the assets and was not rehypothecating them. Are you guys seeing a lot of engagement on that proof of reserve issue? Curious just how you think about that as a value prop for a company that runs a platform.
We're seeing a lot of traction on that area. And I think a lot of that stems from the events of 2022, just a lot of the companies that were custodying client funds and a lot of the unfortunate situations that happened there. What stemmed from the entire FTX situation was firms reaching out to us in any capacity that held customer funds, just looking for some type of proof of reserves. And it was difficult to fit what that deliverable looked like, because when you think of stablecoins, it's very easy. The reporting infrastructure is there. It is governed by the only one that has issued any guidance is the New York Department of Financial Services. But any companies that are not under their purview want to follow that best practice. When you think of what's out there for maybe an exchange, there's really not any industry standards yet. And I know we're moving in that direction, but a lot of companies were coming to us at that time to just say, hey, we need this proof of reserves and we need it yesterday. It was a bit of a fire drill. And I think that whole situation opened many eyes for customers to be skeptical of crypto companies. It was a difficult time in the industry. I think it goes against the entire ethos of crypto, in my opinion, of not your keys, not your coins. When I think of digital assets, I think of financial freedom, and I think the innovative pay rails that they offer, the utilization of blockchain technology. But I think we're trying to fit crypto into the existing infrastructure. There is some give and take. So we saw it with the ETFs, where any individual that's engaged in purchasing the ETFs, they are held at a third-party custodian, which is fully transparent and verifiable. But it's the same thing as the traditional banking world. So I'm holding my money at a third party. What's different than holding my crypto at a Coinbase or a Kraken? It's the same concept. So there was a lot of hectic times from 2018 to 2022. And I think the events of 2022 opened a lot of people's eyes to let's go back to the original whole reason why crypto came to be. I want to have title to my money. I want possession of it. And I don't want someone to be able to freeze my accounts at a given point in time. It was certainly eye-opening, but when we're seeing a lot of the proof of reserves, I think a lot of it is difficult to figure out what that deliverable is going to look like. Me wearing my audit hat, it's an entirely different situation where you have almost an IT component of it. And we're looking at the Merkle tree component to be able to test certain client funds and give them proof that their account was verified. So it's very nuanced when it comes to things like that.
Yeah, I guess you'll see different implementations depending on wallet architecture, but at minimum, there should be something in place. You think about what FTX would have looked like if it was forced to be onshore, if there actually was a market structure that would support that type of business in the United States. And the thing collapses, and then within a couple of hours, people are coming to the realization that there's no cold wallets at this exchange, which is just crazy. Think about the technology just supports something new and novel around proving the authenticity of funds and that they're there. And the number one in terms of market value crypto company just wasn't doing it.
It's interesting because just the opportunity of what FTX offered, I never used their platform, but I know a lot of clients that had. But when I think of if I'm going to use a third-party platform or third-party exchange, it is a little assuring to see that Coinbase is SEC regulated. So I think a lot of companies that we work with have made the full transition to Coinbase just based on that fact pattern that they are fully regulated. And I'm not using an exchange that's popped up overnight because they offer 1,000 different buying options or opportunities. So I think we're seeing more and more companies, if they are holding at a third party, someone that is fully regulated, fully compliant, just to check as many boxes to give you almost that peace of mind, because it is so unfortunate of what happened. And the lack of transparency is what hurt so many people. Once everything came to light, it was very eye-opening. Wow, my funds were completely used to buy a penthouse.
Crazy. So one of the things that kind of second order impact of FTX was there was a lot of firms that pulled back from the industry. And I'm sure you guys saw this. A lot of your competitors really cut back on servicing startups and working with some of the marquee companies, I would say, in the industry. It had to have been trying times. What was that like in the post-scandal days?
We always had a very rigid acceptance committee here at the firm. That wasn't just for crypto. That was for many industries where we were waiting for certain regulation. So any of our SEC engagements, we go through full client acceptance, any crypto, any cannabis. It wasn't something new. I think the only thing that made it a little bit more difficult from our perspective, we certainly didn't change our existing practice. I think the only issue was we got a little bit more selective. We certainly worked with any companies we were working with before the FTX situation or anything in 2022. We continue to work with those companies. We didn't turn down because of a change of practice. We continue to service the same lines that we continue to service. But I think as a firm, we just started to put our hat of risk on and say, okay, is this opportunity worthwhile for us to work with for a crypto company? What's their opportunity in the market? Can we grow with them? Is there opportunity for us, or is this a one and done opportunity? And if it's a one and done, is the risk worthwhile for us? So we certainly became selective because, as you can imagine, at that time, like you said, many firms closed the doors or turned a blind eye a little bit to this space. So there was opportunities flying around left and right. So we had to make sure we were doing our full due diligence and fully vetting any companies that were coming to us, making sure they had the right board in place, because we do full background checks on all management and key personnel. So making sure we have a full understanding of who's involved with this project. Is there any tokenomics we need to understand and look at the white papers? Where are their assets custodied? Who are the related parties? So there's a whole host of services that was already in place. So we already had that infrastructure, which was nice. I think it was just, there was a little more scrutiny to making sure we were doing that a little bit more diligent. But our practice hasn't changed. We are still tackling this space head on, just as we were 2 years ago, just as we were 6 years ago when I joined. We're one of the few firms in this space that are working very actively and continue to do so.
It helps to have seen the cycles. I remember being at Fidelity in 2014 and 15, and that was after Mt. Gox, and the price of Bitcoin trended down to like $200. And I was just looking around wondering to myself, when are we just going to fold up here and I'm going to have to go find another job here? But it was really the firms during that cycle that stayed with it and kept hiring and kept working with other startups in the industry. They really reaped the benefit when the cycle turned. A lot of firms seem to have sold the bottom here post FTX, not only in terms of the price, but in terms of the human capital side of the business.
That's where we saw a lot of opportunity to grow. So during some of those down periods and when we're in a bear market, it's all about persevering and working with the companies, making sure we're helping them stay afloat, but also ourselves. We want to make sure our practice is maintaining and we're continuing to grow. And I think during those bear markets is where we come through stronger and make sure we have a good reputation of name because we made it through. We have the resources at our back. Our team as a whole here at Withum, when you think of our digital asset practice, that primarily falls under our technology group, which is where I live, and as well as our financial services team for the hedge funds and investment companies. All in, I would say our team of digital asset experts are probably north of 50, and we service over 100 clients across that. We have various specialties, whether it's audit, tax, again, under that Oasis umbrella, like I mentioned earlier. And it's all about just making sure we're staying educated, learning, and we're staying relevant. When you're talking to an accounting professional or a tax professional and looking for a new service organization to help you grow, it's a partnership. So you want to make sure you're talking to someone that understands your business and understands the industry that you're in. As we both know, crypto could be a hot topic. It could pop up overnight and everyone is talking about it. You're talking to your families about it. The Thanksgiving of 2017, your grandma was asking about it. I think it's important to keep in mind that you're talking to a professional that understands the industry, has been through it, and knows your business, because I think at any point in time, you could come across someone that may seem reputable, but they just don't understand the nuances that come with working with digital assets, the complexities, and making sure that they're keeping your business top of mind.
100%. My last question would just be, where do you guys think you'll be the most busy over the next 12 to 24 months here in the crypto space? And I guess the risk of the question is just asking you to predict the future here. But if I had to guess, there's some categories that are maybe hotter than others in terms of the engagement front.
I am an auditor by trade, so I do stay in my lane. I wish the answer here was audit, but I think over my entire career in digital assets, which spans about 9 years now, it's always been tax, 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 tax. Corporate tax work continues to stay. It's here every year, as well as on the individual side. So we work with both individuals and corporate businesses, but I think that's the area where we see the most opportunity and the most growth. And it really came to light when we were back at Consensus a couple of months ago. We've been sponsoring, we had a booth for the last couple of years. 75 to 80% of our discussions are always tax related. It continues to stay top of mind for individuals and companies, and it's continually where we see the most growth. So I think as the industry or market, I should say, as prices go up, businesses do better. I think that's just the wind at our backs, and we continue to see more and more opportunity there. I'm not a tax professional, so I just know where to steer those discussions to in-house. But I think one area that I'm excited about that would impact both Withum as well as the industry as a whole is tokenization of like real world assets. And I think that's been something that's been tossed around for a couple of years now. But I think we're starting to gain some traction. I think over the next 2 to 3 years, we're going to see a lot of traction there, because when you think of the regular individual that might not understand what crypto can do or what digital assets can do and the underlying technology, we always say blockchain technology is the way of the future, right? That's going to be where the whole community comes together and really brings digital assets to the forefront, is the use of blockchain technology. I think that tokenization component is what's going to bring it to light. Tokenization of real estate, tokenization of personal identifying credentials, your identifying information. I always have a funny example where I think this should have happened 4 years ago, because I bought my house in 2020, and I don't think my deed to my house got registered for about 5 months after I purchased my house. Should have been done the day I signed.
I think you're right on this real world asset front. I think a lot of the projects that were attempted on private blockchains back in the 2016 time period, we're starting to see that dream be realized in the form of a public asset, a public chain, in some cases permissioned on top of public. But if you just look at the quantum of capital that is attempting to tokenize right now versus what's in market, it's a stark difference. And it's probably a market structure bill, if I had to guess, that really pushes us over the line in terms of actually getting some of these assets on chain and trading. So I'm excited about that category too.
I think that's going to be a big way of growth for the community. So I know we talked about stablecoins at length. I think that's going to be a really good headwind. But I think what's going to really hit home to many individuals is tokenization of real world assets.
Well, Mark, thank you for all you do and Withum does for the industry and supporting the startups in the ecosystem. Where can we send people to learn more about your guys' offerings?
So you can visit our website at withum.com. That's WITHUM.com. We have a landing page for our digital assets group. You can contact me right on the page. And we're always looking to speak with companies, speak with founders, speak with individuals. I know that's more from a business opportunity, but also from just a networking opportunity. If you're ever looking to pick my brain, like I mentioned, my cell phone's right in my email signature. So as soon as we connect, you always have a direct link to reach out to me. So just looking to continue to build our practice, making sure our brand recognition is there. And Matt, I can't thank you enough for having me on.
Thanks for coming on, Mark. Really enjoyed it.
Appreciate it.
Thanks for listening to another episode of On the Brink with Castle Island. To find out more about Castle Island, visit castleisland.vc. To listen to all of our podcast episodes, please go to onthebrink-podcast.com or just click on the tab in our website. Thanks for listening.